The South African Reserve Bank says it views the allegations of banks colluding in a serious light. This comes after the Competition Commission referred a collusion case to its tribunal for prosecution against 17 local and international banks. The banks are accused of colluding to fix the price of the rand. The Commission has been investigating a case of price fixing and market allocation in the trading of foreign currency pairs involving the rand since April 2015. It found that banks colluded from at least 2007. Now, the head of law at Monash South Africa, Professor Tshepo Mongalo, says most of the institutions involved in this kind of practice rely on a false sense of protection that they will not get caught. Professor Mongalo joins us in studio to talk about currency manipulation and competition law. A very good morning to you, Prof. Thank you for being with us.
Thank you very much, Evan.
As an expert in competition law, how do you view the Competition Commission's findings that 17 banks have colluded and have to appear before its tribunal for the devaluation that we saw in the rand?
Well, I think it is a step in the right direction, particularly given the fact that it is anybody's guess as to how far does this conduct extend to. But what we know is that there is much likelihood that this conduct is very rife in the market industry.
You say that collusion, price fixing, it runs deep in the financial markets. Could you perhaps give us a sort of view as to how it happens, what it entails for specifically the man in the street who don't follow this kind of financial stuff every day?
Well, basically what happens is the collusion between the banks obviously will determine what the value ultimately of the currency that they are colluding in or manipulating is going to end up at the end of the day. And that would actually have a ratcheting effect on a whole lot of things that are dependent on the currency value, including also the determination of the interest at some point in time, also the determination of the price of fuel, for an example, things that will hit an ordinary man in the street in the pocket. And therefore, those kind of things, those kind of conducts do not only affect those that are contrary to popular belief, those that are engaged directly in the process of trading in foreign currency, but it can even affect an ordinary person in the street, because this has got a drizzling effect, if I were to call it that way.
If one can put it, I don't know, put it in rand and cents or in a language that people can understand, what kind of effect does your research or your view since 2007 have of what has happened and the effect that it's had, the sort of ripple effect it's had in South Africa? We've since that time kind of gone downhill economically a little bit, and maybe people out there would point a finger at the banks that this could be part of what's been going on.
To a large extent, it will be very difficult to determine that all the currency movement would have been dependent on the collusion. I mean, the market forces are quite extensive. But obviously, when there is an intervening conduct, the one that the bank have been involved in, you would find that they actually contribute towards the movement in the market, in the currency. It may seem to an ordinary person that a shift in 1 or 2 cents may not actually make a huge difference, but to those who are trading in the currency, it can actually be quite extensive, because they deal in volumes, not only in like 100 rand, 1,000, they deal in billions. And if you do that on an ongoing basis, a difference in rand or even in 2 cents can actually make a huge difference. Therefore, the banks can actually benefit a lot here or avoid a huge loss, and at the same time then pass on that to the ultimate determination of the currency value, which will then trickle down to the ordinary person. And to the extent that it could have been, I mean, we know that it has been happening, at least in this case, since 2007, since the investigations took place. If we even say that it was actually 2% of all the currency determinations, it will be quite extensive. It will be a lot of money.
Yeah, it's a nice way to mitigate your losses in the end if you understand these processes. Now, you've been a strong advocate for strict regulation of the banks, and how do you see this work, and how is it going to curb this kind of anti-competitive behavior?
Well, we know very well that currently before the NCOP there is the financial sector regulation bill, which is going to regulate the conduct of the financial institutions. And it is actually proposing the Twin Peaks approach, in terms of which the conduct will be regulated by the regulator that will replace the Financial Services Board, and the prudential assurance then by the South African Reserve Bank. Now, it has been one leg that has been missing through the regulation has been the conduct of the financial institutions. The market conduct of the financial institutions has been lacking from the regulation. To give you an example, in terms of the regulation of corporate entities, companies, when they can be able to determine or to manipulate the value of their securities, meaning shares, we have the Financial Markets Act, which has been enforced since 2012, which has actually introduced strict penalties for those who are engaged in financial market abuse, including having to account for the profits that you have made, and also been penalized in terms of insider trading if ultimately you lead the market to believe that the securities are worth this much, whereas they are not worth something else. But this has been lacking in the financial sector in respect to the banks.
It's absolutely shocking that you tell me that everything else seems to be regulated except those who run roughshod with your money. However, I want to talk about the change in competition law, because the President talked about it during SONA a couple of weeks back now. How is it going to clamp down on the control of monopolies here in South Africa, and the kind of cartel-like behavior that we see so often? Before the Competition Commission, they told me that they've got 133 cases of cartel-like behavior that they're investigating in South Africa.
Well, to the extent that the legislation is going to propose the demolition of the cartel in industries, this will actually go a long way. But we must understand that in certain industries, the market players are very limited, and it's going to take a long time to actually create competition in those industries. And to that extent, I think, even though we can have a sort of a legislation to build up that competitive players within the industry, it'll basically take a long time. But to create an environment for those competitive players to arise will be quite helpful. And I think if you can say we're going to punish criminally those who are involved in this conduct, and therefore that will crush the monopolies, may be quite short-sighted, according to me, because when you penalize criminally only the people who are involved in the practice without penalizing the institutions that may benefit from this kind of conduct, then ultimately you are not going to kill the monopoly quite quickly. But if you are going to address actually the anti-competitive practices of the cartels and break the cartels and create an environment for the creation of competitors within the environment, that can work, I think.
Now, the billion-dollar question, pardon the pun, the billion-dollar question now is, what sanctions do you then believe those found guilty of anti-competitive behavior, even those who went and blew the whistle? We heard some blew the whistle on others and worked with the authorities. What should the sanctions be? Because it should be sending a message and setting an example, shouldn't it?
Yes. I think at the moment we think, research actually shows that to just have a one-size-fits-all penalty of, saying, 10% of your turnover may be unrelated to the conduct. And the conduct may actually lead to the institutions either making billions and billions of rands, which will be way more than the 10% of their turnover, and then they can be able to pay that off. And sometimes it can even be maybe less, in which case then it will be quite punitive. But I suggest that in the case, in as much as it is done in terms of the insider trading offences under the Financial Markets Act, where a person can be punished for or penalized for the loss that they have avoided or the profit that they have made as a result of market manipulation, something similar to that, something that is similar to what we find in the Financial Markets Act should be adopted insofar as the conduct or market conduct of the financial institutions is concerned.
Prof, thank you for coming in today. That's the head of law at Monash South Africa, Professor Tshepo Mongalo. And of course, we're talking about collusion. At this point specifically within the banking industry, of course, 17 local and international banks will appear before the competition tribunal now to give answers as to what they did with the currency of this country.